What's good? What's good? Welcome back to Invest and Trade with Josh. We're going to go over Bitcoin. Currently, we're sitting at 29,418, up about 1.13 on the day. We're sitting at a market cap of 555 billion, 24-hour volume 17.72 billion. Ladies and gentlemen, if you're new to Crypto.com, sign up to the world's fastest growing crypto app. Grab one of their incredible Visa cards, cashback in crypto, free Spotify, Netflix, Prime, travel incentives, $25 just for signing up through my referral. So we're going to pop over to a chart that I have been using in previous videos, and how we always go through waves of demand followed by accumulation. You can see from the start of Bitcoin, we had our first demand wave accumulation, second demand wave accumulation, and a third demand wave before going into the bear market. And we repeated that cycle until the bear market of 2018. So if we are repeating that cycle once again, this is just a massive phase of accumulation, and we're looking for that third demand wave. And in my previous video with our Elliott wave theory, I had drawn out this as the top of wave 5, but I actually think this is the top of wave 3 after looking at the previous chart I had just showed you guys here with the demand waves. And the reason for that is if we take our Fibonacci from the peak of the bull market of 2014 to the bottom of the bear and we pull it out, I just want to make sure that it's on point here. Perfect. We can see that we came all the way up to the 2.272, almost up to the 2.414 extension, went through an ABC correction, and once again started our demand wave. So if we take our Fibonacci here from the previous bull market high of 2017 all the way down to the bear market low, and we stretch it out, we may be looking to see that fifth wave all the way up in between the 2 and the 2.272, which is in between 126 and 210,000. And right now we're going through that wave 4 correction, waiting for our fifth and final impulsive wave, and our third demand wave taking us up to those price targets. And right now we're just going through an expanded A, B, C correction, quite possibly taking us down to that 22K price target. So if I pop over to the next chart here, which is on the daily, as you can see, I've labeled out the waves: impulsive wave 1, corrective wave 2, that largest wave 3, and we may just be going through that corrective wave 4 before that final wave 5. Whereas before I had it drawn out as a wave 1, corrective wave 2, impulsive wave 3, corrective wave 4, and impulsive wave 5. But as you can see, the wave 5 isn't very substantial. I think it's more likely here that this is the corrective wave 4. Let me just quickly remove some of these lines here. That we're going through the corrective wave 4, waiting for that last impulsive wave 5 and our third demand wave, which we've seen in each and every bull run. We've had 3 demand waves, and then once again we see a massive correction. Now I do believe we are in a bear market, but this may just be a massive phase of accumulation. As long as we don't come down and break the swing high of wave 1, this could be the large corrective wave 4, waiting for that final wave 5 to take us in between 126 and 210,000. So if we pop back over to this chart on the daily here, just try to ignore this clutter. We'll zoom in a second here. It does look like we're just going through that expanded or a regular A, B, C correction, and we're trying to find that bottom, which could quite possibly be that 22K level. If not there, then 17 to 19,000. So if we zoom in here on the 4-hour time frame, now each ABC wave has 5 waves within it. Just like each wave with the Elliott wave sequence has 5 subwaves, 5 smaller waves within each wave, so does the ABC. So I do believe we're going through that C wave correction. Hold on a sec, just let it load up here. As you can see here, here's our final wave C, and we've come down 1, 2, impulsive wave 3, corrective wave 4, and we're looking at that final wave 5. And within wave 5, of course, is 5 waves. So we have impulsive wave 1, corrective wave 2. I do believe this was the impulsive wave 3, and right now we're going through that corrective wave 4. And I was talking about an ABC correction, but it looks like we may be going through an ABCDE corrective triangle, which is a corrective structure within the Elliott waves. It's called an Elliott wave triangle. Here it is right here. So we have bear market. So you come down, you create A, B, C, D, E before seeing that continuation to the downside. And it does look like that's what we're doing here on the chart. If I open this up, we came down into this triangle. We completed wave 3, and we're going through an A, B, C, D, E. So if we do get rejected here and we begin to roll, as we have been creating lower highs, as you can see here, we have a high, we have a lower high. So if we create a lower high once again for Bitcoin, I'm just going to zoom in on the 4-hour chart and we roll over. That's when we'll see that final wave 5 bring us down to that 22 to 24K level. Now, if we were to push up to 31K, it would invalidate this ABCDE corrective triangle. And then we'd have to look at a larger ABC correction with a wave 4 bringing us up to 33 to 34K. But as of right now, it does look like we're going through this Elliott wave ABCDE corrective triangle. If we do get rejected here and we roll over, we start to come down, and that would confirm it, and we'd start to come down to that 22 to 24K level. The way that it would be invalidated is if BTC breaks out of this triangle and starts to push up, especially if it breaks this high and comes up to 33 to 34K. That's when we would have to look at some sort of ABC correction where we come up, we create A, B, and that was our final wave C before seeing that last impulsive wave down to 22 to 24K, in my opinion. But as of right now, we are in a descending triangle. We've completed this ABCDE structure. So if we were to break down here, it would confirm that we are going to start to break down and see that final wave down quite possibly to 22 to 24K, as 22K does line up with the 200-week moving average. I know it's quite a bit to take in. Of course, it is theory based, so take it with a grain of salt. But as of right now, we are in this descending triangle. So if we do break down, I do think there's a strong likelihood of us coming down to that 22 to 24K level. But if we were to break out of this descending triangle here to the upside, could take Bitcoin all the way up here to about 32K. And then you can see that push up to 33 to 34,000 before seeing that final wave down to 22 to 24K, in my opinion. So if we quickly zoom into the 1-hour time frame, I'm just going to pop open my indicators here as well. We'll take the RSI and the money flow. We can see here on the 1-hour time frame, I did notice a bit of a rising wedge pattern. I'm just going to pull this out here, as well as a hidden bearish divergence. As you can see here, we created a lower high on the chart while creating a higher high on the RSI. It would be invalidated if Bitcoin does come up and break this high, but as of right now, it is valid. So if we start to roll over and we break down out of this rising wedge, that's when you can come down to about 28.3. And if we lose that low, then I would expect you to come all the way back down here to retest these lows here, right around that 26 to 27.5K mark. And of course, if that low is lost, I would expect you to come down to that 22 to 24K level. So that's basically it for this one. Big shout out to the Discord. We have over 1,900 members talking all things crypto, posting chart patterns. You really can't beat it. And we have the DCA trade strategy fully explained, very simple method of trading. The DCA charts for the live dollar cost average trades on the channel. Buy and take profit zones if you want to start dollar cost averaging into your positions. And at the $10 membership, my exact entries, exits, take profit. And you can sign up through the Patreon if you want to trade with me. Sign up to Bybit, and I'll see you in the next video. All right, much love. Take care.